Investors assess the economic implications as sterling hits two-year high. Welcome to Market Insight. I'm Ludovica Bagnola. Sterling has hit its highest level against the dollar since March 2022, supported by stronger than predicted economic data and optimism that the new Labour government may lead to a period of political stability. And as the US Federal Reserve prepares to cut rates more aggressively than the Bank of England, will sterling keep strengthening? And if so, what would the implications be for the UK's economy? Well, to help answer all that and more, I'm joined by Vicky, Chief Economic Advisor at the Centre for Economics and Business Research. Thank you very much for being with us today. Right, so let's start off in the UK. What are the implications of Starmer's speech yesterday for the UK economy? As you say, investment intentions seem to be in some sort of a limbo until more clarity is given in the forthcoming budget. What's happening?
Well, absolutely. I mean, what we've had is a speech by Keir Starmer. So Keir Starmer, the Prime Minister, saying that things are going to get worse before they get better. So one keeps fingers crossed that indeed they will get better. But I think what he's suggesting is that there are going to be some tough measures coming out of the budget on October the 30th, which really people have been expecting now for some time, particularly since the Chancellor of the Exchequer, Rachel Reeves, made her own initial statement to the House of Commons, saying that they had discovered this 22 billion black hole in finances, and certainly for this year, and therefore there would be some measures taken. Some measures have already been announced, including the review, if you like, of who is going to be getting winter fuel payments among pensioners. So that's going to be restricted quite significantly from here on. So ways in which you can reduce perhaps this 22 billion black hole somehow, and there will be more. So what investors are saying right now is that we're going to have to wait a little bit and see what comes out of the budget, because of course if there are changes in capital gains tax or corporation tax or any other areas that affect businesses directly, or even wealth taxes, which might affect willingness of people to A, be in this country, and B, to invest here. What happens also on the equity front, because there will be, from what we understand, a change in the way in which any capital gains that are made by private equity when their own money is involved will be taxed as income tax, possibly. So there are all sorts of suggestions which are inhibiting right now, from what we understand from surveys, people's willingness to invest.
And meanwhile, in the UK, we are noticing some serious sterling strength and or dollar weakness, right? Is that set to continue, given that the Bank of England might not cut rates at the same pace as the Fed now?
It's really interesting how this is happening, because on the one hand, what it tells the Bank of England is that perhaps with the exchange rate being so high, the inflation worries are less and maybe we can cut rates. But on the other, what the markets are now looking at is more a dollar weakness, which is that because there is now increased pressure for the Fed to reduce rates possibly by more than been anticipated originally, possibly 50 basis points in September rather than the 0.25% that people expected earlier. A cut anyway will happen, and maybe more cuts following. There is an inbuilt dollar weakness in there, which benefits the pound up to a point and might actually, strangely enough, allow the UK to cut rates, faster than would otherwise be the case. Where the balance on the exchange rate is going to end up is a big question mark, but it is really all based on interest rate expectations from both sides of the Atlantic.
Right. Let's get to Germany now, because CPI is out tomorrow. And are you expecting the disinflationary trend that we've seen to continue? And if so, what would this mean for the ECB then?
Well, again, the contrasting trends. What we've got, of course, in the US is the possibility of rates being cut more than had been anticipated originally because of unemployment issues, or employment issues being an issue. But there are serious problems, of course, in Germany as well, where we've seen unemployment go up. And we're also seeing, of course, inflation still quite close to target. I mean, it's true that it had gone up in July to 2.3 from 2.2, but frankly, that's pretty close to the target. The expectation is that it could actually be slightly lower For August, we're getting the flash estimates, as you suggested, pretty soon. And the Eurozone generally might see a reduction as well, from the 2.6 to possibly 2.5, even lower percent for August. If that is the case, then the ECB may well react with a cut, its second cut, of course, because we had one back in June, in September, and that will be welcomed certainly by the biggest, strongest country anyway, or at least wealthiest country so far in Europe. So Germany will benefit from that, and I think there is continuous pressure to ease monetary policy, and I think that will probably happen. So German indicators are very significant, and manufacturing, for example, has been in decline for quite some time. The latest data for August for the PMI suggests that it's fallen further.
The next big market catalyst, right? Nvidia's results, and that would be market moving, to say the least. What are you really expecting on that front? I mean, good results, some pullback in the stock maybe, or simply just a continuation of what we've seen so far?
Well, we've seen the stock being quite volatile, but the expectations now are that the results will be quite good when they're announced later today. That, of course, affects hugely the entire US market. And I mean, the tech sector is so important. There had been suggestions that perhaps investors had become less enamored by AI, but I think when we see the figures, we might see that this is in fact not the case, but a lot of anticipation ahead.
Thank you very much, Vicky Price from the CEBR. Thanks for your thoughts, and that's your Market Insight. Don't forget you can watch more videos on Reuters.com.